It's Thursday, September 22nd. You're watching The Big Story with me, Haryanto Diman. Subscribe to the Straits Times channel so you will not miss an episode. With the Federal Reserve raising interest rates by 75 basis points for the third time and pledging more hikes to come, what will it mean for us here in Singapore? The Fed has been trying to lower inflation in the US, which is running at above 8%. The rate hikes that started in March mark the most aggressive policy tightening in nearly 30 years, with the key interest rate rising to 3 to 3.25%. The Fed admits its move will bring some pain to Americans.
Restoring price stability will take some time and requires using our tools forcefully to bring demand and supply into better balance. Reducing inflation is likely to require a sustained period of below-trend growth. Moreover, there will very likely be some softening of labor market conditions. While higher interest rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses. These are the unfortunate costs of reducing inflation. But a failure to restore price stability would mean far greater pain.
Joining us is senior business correspondent Chor Khieng Yuit. Khieng Yuit, we know that Singapore is not immune to what goes on in the global markets. So what will the Fed's latest move mean for consumers and businesses here?
Hi, Haryanto. What actually stood out for me this time from the Fed's meeting was the tone of the Fed's message, because the Fed has become decidedly more hawkish and is expecting another 1.25 percentage points hike before the end of 2022. So we have two more meetings, November, December, so we can expect more hikes to come unless the data shows that US inflation is getting better. Now the question is, why do we follow US rates so closely here in Singapore? This is because Singapore is a very open economy and the banks here conduct a lot of our operations in international markets. And US dollar is usually the main currency in these transactions. So when the US interest rates go up, Singapore tends to follow. Now, for consumers, the message here is this: brace for higher rates, because one of our biggest ticket item is our home loans. And our home loan rates have been going up since fourth quarter of last year. Now, as an example, the 3-year fixed rates were at 1.15% in Q4, but they have now shot past 3%, and the 2-year fixed mortgage rates are between 2.75% and 2.98% and could go even higher. So the Singapore overnight rate average, or SORA, which is the new benchmark that's going to be used to price all floating loans, including our home loans, has also been creeping higher since the Fed started the rate tightening cycle in March. 1 month and 3 month compounded SORA were in the 0.2% range back in March, and as of today, September the 22nd, the 1 month SORA has gone beyond 2%, while the 3 month SORA is hovering at the 1.8, 1.9% levels, a full increase of about 1.8 percentage points. Now, we have car loans, we have credit card debts on top of home loans. So if you have a lot of debts, or if you have been spending beyond your means, you may want to relook your finances and expenditure. As for companies, the small and medium enterprises are among some of the hardest hit here in Singapore. SMEs are the backbone of our economy, and according to a UOB report, they contribute 48% to our GDP and employ about 65% of our workforce. So I spoke earlier to Mr. Ang Yuit. He's the Vice President of the Association of Small and Medium Enterprises, to understand how SMEs feel about rising rates. And Mr. Ang shared that SMEs are not worried so much about whether they can access loans, but more about the cost of borrowing. He said that it has become more expensive for them to take loans. He shared that 1 year ago, cost of borrowing was around 2%, but now it has since doubled. And he said that because of the rising cost of borrowing, SMEs have turned cautious about the rest of 2022, and they are cutting back on investments, cutting down on capital expenditure and unnecessary cost. Other companies who have a lot of debts will also have to pay for higher rates. This is because you are going to have to be paying more in terms of your monthly repayments, and it will eat into your cash flows. And if your debts are denominated in US dollars, rising rates and a strong US dollar will mean that your US dollar denominated debt will get bigger. So companies will have to be careful, especially if they have a lot in US dollar denominated debt. And for companies who import raw materials from overseas, you also have to pay more for their raw materials as a strong Sing dollar makes everything more expensive.
Khieng Yuit, the Fed is doing this to tackle the problem of inflation. Now, inflation is not just a problem in the US. Let's talk about the Singapore context. How are the authorities here tackling rising prices?
Yes, Hariwanto, that's why the Monetary Authority of Singapore, our central bank here, has been tightening monetary policy to help counter the strong US dollar and rising import prices. Just for data, Singapore's inflation rate for July rose again at its fastest pace in more than 13 years in July. Core inflation, MAS favorite price measure, rose to 4.8% year-on-year in July. Headline inflation rose to 7%. We will be watching for August inflation numbers, which will be out tomorrow, to see whether they are continuing their rise higher. Now, because Singapore's capital markets are open and interest rates are largely influenced by global market movements, especially in the US, Singapore Central Bank does not fight inflation through the raising interest rates. Instead, our MAS does so by letting the Sing dollar rise or fall against a basket of currencies of its main trading partners. MAS has already tightened monetary policy 4 times since October last year. 2 were all out-of-cycle moves outside of the April and October monetary policy reviews. MAS is trying to do this to dampen imported inflation because a stronger Sing dollar, by raising the Sing dollar, it will make imports cheaper and in a way help to mitigate the cost of imported food inflation or the cost of imported raw materials for companies. Now, with inflation showing no signs of abating, economists expect MAS to further tighten monetary policy again at its October meeting.
Many thanks to our senior business correspondent, Chor Khieng Yuit. European Union foreign ministers have agreed to impose more sanctions on Russia and increase weapons deliveries to Ukraine. Now, this comes after Russian President Vladimir Putin's latest escalation in the war against Ukraine. An 8th EU sanctions package will now be prepared, targeting more relevant sectors of the Russian economy and people responsible for the war. The package could be finalized in mid-October. Overnight, hundreds of protesters were arrested for rallying against Russia's decision to mobilize reservists to fight in Ukraine. And flights out of Russia quickly sold out after President Putin's announcement raised fears that some men of fighting age would not be allowed to leave the country. Russia's escalation of the situation in Ukraine also sparked condemnation from world leaders at the UN General Assembly.
A crime has been committed against Ukraine, and we demand just punishment. The crime was committed against our state borders. The crime was committed against the lives of our people. The crime was committed against the dignity of our women and men. The crime was committed against the values that make you and me a community of the United Nations.
A permanent member of the United Nations Security Council invaded its neighbor, attempted to erase a sovereign state from the map. Russia has shamelessly violated the core tenets of the United Nations Charter. No more important than the clear prohibition against countries taking the territory of their neighbor by force.
In other news, a meeting between the South Korean President and Japanese Prime Minister on the sidelines of the UN General Assembly was the first such talks between leaders of the two countries since 2019. They agreed on the need to improve relations and shared mutual concerns about North Korea's nuclear program. Across the causeway, speculation has been rife about when Malaysia's upcoming election will be held, with rumours that the polls will open in November. But that is unlikely to be. Malaysian Health Minister Khairi Jamaluddin said holding the general election amid the monsoon season will not be suitable due to logistical as well as health concerns. He said governments usually avoid calling for polls at a time when a flood contingency is expected. Malaysia's annual monsoon season typically starts around late November and will last until February. And flying the Singapore flag high and spreading our love for food overseas. The Singapore Food Centre Urban Hawker, boasting 11 vendors directly from Singapore, soft-opened in New York yesterday. Located near Times Square in Manhattan, Urban Hawker features names including White Restaurant, which is known for its white bihun, halal burger chain Ashes Burnett, and prawn noodle stall Prawnaholic Collections. The food centre, which will officially open next Wednesday, is a partnership between a founder of Makan Sutra KF Sito and Urban Space, which operates multiple food halls in the United States. And those are top stories today. Visit straitstimes.com for more news and our YouTube channel for more videos. Subscribe by hitting the red button below. I'm Haryanto Diman. See you tomorrow for more stories on The Big Story.